when you look at, say, the Bitcoin only ecosystem, I mean, Bitcoin's not a security. That's something that, Gary Gensler has been very clear about. There's no issuer, never raised capital. So that's more like a digital commodity. But most of what you see in the space is more like a security. You can think of it more like an equity that just hasn't gone through the same sort of registration process. Well, so I'm not bullish on crypto as a whole. I found value in Bitcoin. I think the design of basically it's the truly decentralized one, and it's got very strong network effects. I think stable coins are serving a purpose for people, as we just discussed.
Popular macro analyst and founder of Lyn Alden investment strategy, Lyn Alden recently discussed her trust in Bitcoin and, to some extent, stablecoins over all other crypto assets. In a recent interview, Alden, who has over 15 years of experience in investment strategy research, discusses some of the appealing qualities of the world's largest crypto asset. She compares Bitcoin to other cryptocurrencies and asset classes like cash, gold, and stocks. According to Alden, the global financial system is yet to mature enough to meet the demands of 8 billion people. Most of the world's 180 fiat currencies are restricted to particular regions, and international banking services are pretty much reserved for the rich and powerful, even in 2023. Then there is the issue of undue censorship and government overreach, inflation, and other issues that limit even the biggest fiat currencies. But Alden believes crypto can and does suitably fill this gap in the global financial systems. And not just any of the thousands of cryptocurrencies available on the market, but Bitcoin, the world's largest crypto by market cap. In her interview, Alden also discusses how these other cryptos, which she believes are securities, impact Bitcoin prices temporarily during every cycle but cannot stop its shine in the long run. Before we listen to Lyn Alden, please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss our regular uploads. Also, ensure you drop your comments and observations in the comments section below and check out our other crypto-related videos. Thanks, and enjoy the video.
Basically, we can think of the global financial system as essentially a giant barter system. I mean, money's meant to solve the barter system, but because instead of one or two underlying monies, like say gold and silver, the current system has 180 different fiat currencies, of which something like 130 of them are free floating. The other ones are pegged, but pegs can break, and so you essentially have these 180 different local monopolies on currencies. And if you're just in a certain jurisdiction, that's what you're expected to save in, that's what you're expected to spend with, and that's what holds stable value at least relative to wages and average price levels in your jurisdiction, because it's all denominated in that. And wages tend to be sticky, and certain types of pricing tend to be sticky. And the problem, of course, is that outside of, say, the top dozen currencies, most of them are pretty bad at holding value. I mean, even the top 12 lose value slowly, sometimes more quickly than others, but it's a general slow loss of purchasing power. But if you're outside of those top 12, you're more likely to lose value very, very quickly. And it's sometimes those jurisdictions fall, but it's also because those core countries push chaos to the periphery, right? Because they're the ones that have to borrow in say dollars, right? So instead of issuing debt in their own currency, they're often issuing debt in a foreign currency, which introduces volatility and default risk. And so the challenge is, if I asked this question because I actually have family in Egypt, and they were looking to sell a multifamily home, and of course different participants that own parts of that home want to have different timelines for when they might deploy that into whatever they end up owning next. And so I asked the question on Twitter. I was like, if you had to sell property in a country with a currency crisis and hold that value for whatever reason for 2 years, how would you hold it? And it just showed that the nature of that question is one, a lot of people in developed markets don't think of that. And it just shows how inefficient the current system is, because some people are like, well, I would just hold it in dollars. It's like, well, where are you going to hold the dollars, right? If you're in Egypt or you're in Argentina, where are you going to hold the dollars exactly? Are you going to hold them in your local bank where they could be confiscated? You could have a foreign bank account, but then that implies you're kind of wealthy, right? I mean, not a lot of people don't even have domestic bank accounts, let alone foreign bank accounts. You can do stable coins, but then you're relying on a foreign counterparty, which many people, stable coins are a temporary answer, but it's not a perfect answer. Some people hold it in gold, physical cash dollars, but then you're literally holding like a lot of value in your apartment. You're prone to theft, prone to loss. And it just shows that, basically there's a lot of frictions around one. It should be able to store value stably, but it can't. And so I was kind of used as an example to show how in the 21st century, how basically still inefficient and unable to meet the needs of people, the global financial system still is. I think medium term is just challenging all around because we have various, in this year, 2023, we have a bunch of US recession indicators. That's partially offset by China's reopening, potential emerging market opportunities, dollars, off of its highs. It's unclear if it's going to stay there or not. And so there's a lot of uncertainty in, say, a 6 to 12-month period. I am pretty bullish on precious metals. I'm always tricky with 1 year forecast because you have to be right about the fundamentals, but then you also have to be right about what people are going to pay for those fundamentals. And that's, in 1 year, that's like a guessing game. That's, it goes back to that old quote, like, in the short term, the market's a voting machine. In the long term, it's a weighing machine, right? So over the long term, they reflect fundamentals. In the near term, it's mostly sentiment, liquidity, things like that. And so I think there are plenty of opportunities in emerging markets. If you look North America, I think that pipelines are still pretty attractive. I'm long-term bullish on energy. Unclear for this year because of some of those recession indicators, but long-term bullish on energy, precious metals. I'm less bearish on banks than a lot of people are. And then of course, I do like a Bitcoin allocation and just select equities in different sectors that I think are recession resistant or that, might face turbulence and recession, but that are well positioned to get through it and then provide good 3 to 5 year returns from there.
In addition to establishing Bitcoin's supremacy above other cryptocurrencies, Alden also discusses the rot in the global financial system and how much the world needs a superior asset like Bitcoin. She gives the example of family members who own a property in Argentina and are about to sell it. The snag is each family member wants to sell at different times and restore its value in different ways. How do you sell one house at different times? Alden explains that this and many other finance-related problems can be easily solved with Bitcoin. In her interview, she also discusses her top asset picks for 2023.
Well, so I'm not bullish on crypto as a whole. I found value in Bitcoin. I think the design, basically, it's the truly decentralized one, and it's got very strong network effects. I think stable coins are serving a purpose for people, as we just discussed. Outside of that, so I think that some of those cryptos do slow down the say adoption of things like Bitcoin and things like that, because during a bull market, anyone can create a new coin. You can divert capital for all these different things, and then in a bear market, most of them get wiped out. They give up a lot of their gains, and they never really make higher highs in the next cycle. So I do think that there's a lot of dilution in that sense. But it's one of those things where, no matter how many pesos Argentina prints, that doesn't dilute the dollar, right? And so, for example, no matter how much Doge coins exist, it doesn't dilute Bitcoin because they are different. They are fundamentally different designs, different hash rate, different node networks, different levels of ecosystem development and general seriousness. But it does divert capital, it does slow down adoption. And so that's one of the Achilles heels of say, Bitcoin and broader crypto is that, much like how you can't really copy Wikipedia. Like you can copy all the data on Wikipedia. You can host Wikipedia on your own website, and you can have all the data. There's actually not that much data. You can fit it in a thumb drive. And then the question is, would you get traffic that Wikipedia has if you did that? Of course, the answer is no, because even though you can replicate all the text, you can't replicate all the links. You can't replicate the army of volunteer editors. But if people made 1,000 fake Wikipedias, you would divert some traffic to those, at least for a period of time. And we kind of see that cycle after cycle as the world explores this technology. And so I do think dilution is it's always an intermediate concern throughout the space. I think it depends where you're looking. I mean, a lot of the crypto space has relied on regulatory arbitrage, right? So they're essentially securities. Mm-hmm. Basically, if you look at the Howey rule, they mostly meet the definition of securities. They're a centralized team, or fairly centralized. They're raising capital to then work on something that is, with their work, trying to contribute value to that and make those tokens appreciate in price. Mm-hmm. And so they've been operating in that gray zone. So I do think regulation would slow down them and take away a lot of the scams. But like if you look at traditional startup financing, right? So if you do a startup and you're either a developer, a founder, an early VC investor, you're tied to pretty much the success of that company, right? So you either need an exit, you need like either a company has to come in and acquire your company, which means like serious business people will review your company to decide that they want to buy that and put it into their company, or you go long enough and big enough and then go through all the SEC filings and you go public, and then you can get exit liquidity. Whereas what you see in the crypto space is you'll have all these early developers and financiers. They will, they'll issue these tokens for themselves at super cheap prices. Then, they work on their project for a couple of years, and there's a hype cycle. They get their coins listed on an exchange, and then they sell to the retail public. And then their project never really goes anywhere. It never actually really results in a product that people are using any sort of consumer basis. Mm-hmm. And so you've detached the financial gains of the early investors and the founders and the developers from the actual success of the underlying project that they built, and that's not healthy. So I do think there's probably more regulation. It's unclear what it's going to look like. A lot of those can do jurisdictional arbitrage, so that if they can basically lose access to a large market like the U.S. or have their access restricted, but they can still exist by going to certain other smaller jurisdictions that are more open to those sort of things. But overall, I think that does pressure the industry. When you look at, say, the Bitcoin only ecosystem, I mean, Bitcoin's not a security. That's something that Gary Gensler has been very clear about. There's no issuer, never raised capital, so that's more like a digital commodity. But most of what you see in the space is more like a security. You can think of it more like an equity that just hasn't gone through the same sort of registration process.
What are your thoughts on Lyn Alden's interview? Do you believe in Bitcoin's supremacy over other crypto assets? Please drop your comments and observations in the comments section below. Also, ensure you've hit the like button, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks for watching.